Hey YouTube, this is a chart of the Dow Jones 30 in 3 time frames. So what we have on the left side of the screen is the weekly time frame. It's showing a bullish candle for the week, and the points of interest of this chart are the moving average, which is the 50 period simple, and the bullish trend line. So price closed at 21,977. The 2 points of resistance above are highs for the month of August, and they're also all-time highs. Price respected its trend line right here. It's also respecting the 50 period moving average. So what we have at 21,500 is the origin of this rally here, which happened with a lot of accumulation. There was a lot of buying activity going on, and price was hit very hard between 22,113 and 22,173. So these topping tails are important because they can really determine for us if there is some supply and they're distributing out their shares, they're exiting the market. So we'll see how that plays out in the next week. But in the daily context, the price is starting to drop off, and these resistance points are expanded. They're expanding even more on the 3-hour chart. But for our purposes right here, we have a bearish candle followed by a bearish trend. There was an attempt to come back, which was taken out by this August 17th candle, which was very long and red, as well as this candle, which is very long and red. This candle right here for September 1st, it's technically bearish because the height of the wick above is very long, and comparing it to its real body, which is very condensed and small, it's usually not a good sign. So even though price was able to close above the 50 period moving average here, it's a little bit of a surprise because with the news coming out, you would think that maybe the market would go down because of geopolitical tensions, but that was not the case. All 4 days were bullish. So you had a positive close here, positive close again, and then on Friday, still positive close, but a lot of selling pressure that was going on late in the afternoon. So it was selling ahead of the next week. It's also a location that coincides with 2 other origins of a sell-off. So you have more sell-offs happening, and they're happening between 21,983, 22,043, and 22,129. So when you zoom in and look at all of this in the 3-hour time frame, you have an ellipsis here showing the point of origin of a sell-off where buyers were not able to hold on to their control. The market took a nice blast here and dropped off. Blasted again where it climbed and then dropped off again. So 22,000 is the current point of resistance, which is below these 2 points of resistance here, 22,107, 22,173. So this closing candle here in the 3-hour chart is where price is closing below its 50 period simple moving average. So that is what I have for you this week. The price action is slightly more bearish, even though the uptrend is still intact. On the longer term time frame, the market's higher. In the medium term time frame, the daily chart, it's higher but wants to go down. From day to day, when we're taking a look at which zones are important on the 3-hour time frame and possibly a 5-hour time frame, we're starting to see some confirmation of the bears taking control. So we can look for short-term shorting setups where we can benefit from price going down, making money on the way down. We could also find that, if it's possible, 21,500 is reached and we get to this goal right here. It's a very nice buying zone. So we'll see what happens. Good luck trading and take care.